We're good to go.
All right. Everybody, happy Earth Day. Happy Wednesday. Thank you for coming to this. So I'm pretty sure everybody knows who's going to be talking. Cory and Chris. The three of us and Clark, the four of us have been talking a little bit about this PPP thing and like the amount of time that has been spent looking at it from the side of founders, accountants, lawyers, bankers is crazy. I personally think the government did it just to keep all those public or professional service providers in business. So I hope you're all cognizant of that come voting time. The whole idea of this presentation, I'm sure people have been inundated with, this concept. My son now, when he goes to the bathroom, says he has to PPP. So that gives you a sense of how much he's heard that. The point of it is basically to break it down to four buckets, really four things that we're looking at that we're going to be focusing on. And Clark, can you see my screen okay? Just give me a thumbs up.
Yeah, but you need to move your Zoom controller or something. It says, please move this window away from the shared application. It's
okay.
It's right in the middle of your presentation.
What the hell? Is it gone now or is it still there?
It's gone. You're good to go.
Slowly fading. Okay. And you can hear me okay? So the idea is that we're basically, so we sat down and we said, what are the questions we keep hearing? What are the conversations we keep repeating ourselves about? I don't know why this keeps coming up. Hold on one second. Let me see if I can. Okay. Clark, I don't know how to get rid of that. I got no idea.
Do you want me to host it? This slide deck?
Yeah. Yeah. Why don't you host it? And I'll just tell you to click. Okay.
Working it. Give me one more minute. Presentation.
So while Clark's pulling this up, basically what we did is we broke this down to four buckets. We basically wanted to speak to all different cadres in the audience. So both people that do not fit and don't apply for PPP, we're going to roll through a couple of the other government programs that are out there. Cory will pretty much be focusing on that and speaking to the ones you can do in parallel to PPP. Most of them you can't. It's one or the other. So we'll be discussing that. Second conversation is, hey, I wasn't able to get PPP. Obviously, everybody saw that, more money got released by the government. So it sounds like the banks are going to open back up. But if you haven't been able to get it yet, what that really means, the punchline in that is, yes, there will be enough money for everybody theoretically, as long as you move quickly on it. The third one is, I've gotten my money. What can I actually do with it? What is the, Clark, can you click once, please? Go to the agenda. How to use your money, what can the PPP cash be used for? And then the fourth one is basically around forgiveness, right? For those of us that have gotten the cash that feel like that for the intended purpose, we should be able to get this to turn into a forgivable grant, what it takes, what the preparatory kind of paperwork is, what are the things we need to be cognizant on in terms of timing and stuff like that. So Clark is obviously my technical arm on this. We have 150 people on this, which is great. There is a chat at the bottom of the screen. So if we can, the concept is that there's the four buckets. We're going to go through each one of them, basically 5-ish minutes of content on each one. And for each bucket, we'll go through the content and then have some Q&A based on that. We're going to try and keep them to about 15 minutes each, so 15 minutes per bucket. If some are lighter, we'll go quicker. If some are heavier, we'll go deeper. These always seem to take their, kind of manifest themselves with their own personality every time we do one of these. So use the chat feature, right? And then just put, if it's about the PPP program not working, put your question. If it's about, hey, I didn't get my money yet, what should I do? It's the question. I obviously titled these wrong. The third one should be C, how to use your loot. That's the question, and then please forgive me is the question. So let's try and focus and use that inside the chat feature. Again, the chat's at the bottom. If you see like an orange blinking, that means that there's chat there. You can feel free to send them to everybody, or you can also send private chats over. So any questions, put them inside the chat bot and I'll answer them. But we're going to start by jumping into the first bucket. For those of us that work in organizations where PPP doesn't work for some reason, maybe you're too big, maybe you don't hit one of the qualifications, whatever he wants to discuss. Take it away, Cory.
Okay. Hello, everyone. Like Jack said, we welcome questions. We're hoping this kind of go back and forth, maybe. And I deal well with shooting from the hip. Don't deal well with going off a script. But the first thing that I wanted to talk about today was another loan program. And I first started seeing chatter and information about it probably sometime last week. It's called the Main Street Lending Program. And it is designed for companies that didn't get PPP or were too big to get PPP or actually got PPP but still need some more money for working capital and other things like that. So it's not really as restrictive just for payroll. And it is a program that is being backed by the Federal Reserve. There's not a lot of details out on it yet, and banks are just starting to learn about it. You can do it in addition to PPP, or if you have over 500 employees, you can still do it. So it's something to check out. The loan terms look pretty good. So if that's something that you're interested in, my recommendation would be to work through your bank because they're being fed this information. I was on the phone with one of the heads of a local bank on Friday, and he was talking about this and just learning about it. And I think we're expecting more information over the weekend. So again, if you didn't get PPP or you need additional funds to help fund working capital, this is something to look at. Also, there is a deferral of payroll taxes that is available if you don't do PPP. And originally we thought this was either you had to do this or you had to do PPP, but you couldn't do both. And further guidance has actually come out since then. And you can actually, starting now, you can defer your payroll taxes. So if you're an employer and you're paying federal FICA and Medicare taxes, you can not remit those with your 9 quarterly payroll tax returns and defer payment of that until 50% by December 31st, 2021 and 50% until December 31st, 2022. The caveat here.
Enter your meeting ID followed by #.
Uh-oh. So the caveat here is once your PPP loan, if you got one, becomes forgivable and you get that forgiveness from the bank and the SBA, at that point you can't defer any additional payroll taxes. So you would stop deferring, but then you have the deferral from this point forward until the PPP loan gets forgiven. So we thought it was an either or, but it's actually a both right now. You just can do it until you get your PPP loan forgiven, not actually funded. So you probably got a couple of months for that, till maybe June or July. Another item, and this is an either or, if you did PPP, you can't do this. If you didn't do PPP or didn't get PPP, you can look into this, and that is the employee retention credit, which is up to $10,000 per employee of qualified wages paid to employees that are still on your payroll. And it is a refundable tax credit applied against your payroll taxes on your 941. So you would have to coordinate with your payroll company. And again, it's up to $10,000 per employee, and it's for wages paid through the end of the year. So those are a couple of the programs that are out there in addition to PPP. One you can do with PPP, and a couple you can't. Also, I think in part of the bill that just got passed, additional funding went into the emergency disaster loan through the SBA. So looks like we got a bunch of questions coming in here, right?
Yep.
Am I frozen?
No, you're good, Cory.
Okay. All right. I froze on my computer.
Uh,
Do you guys want to do questions now, or you want to go to the second tranche?
No, let's do a couple questions now. Can you hear me?
Yep.
Okay. It looks like, let's see. I'm scrolling through the questions right now. Okay, so Cory, you described a couple programs. Some are, if and or some are one and not the other. Some are those combined. We're going to send out some documentation around those. The Main Street program that you mentioned, that sounds like that could potentially be the biggest or most influential one, or what is the one that people should be, if they're Googling right now, that they should be Googling?
In terms of dollar size, the Main Street lending program doesn't have as many caveats. Like, it's not just payroll. So if you want more flexibility in what you can use the funds for, that's a pretty neat one. But there's not a lot of detail on it. So right now you might be wasting your time really trying to get details on. So maybe in a week or two. But that one I wouldn't Google. I would contact your bank. Your bank is the one who's going to be able to feed you quality information on that once they get it from the Federal Reserve. What I think the easiest one is the payroll tax deferral, because anybody can do that. If you have employees and you still have them on payroll, you don't have to pay your payroll taxes right now, even if you get a PPP loan. So if you want, contact your payroll provider, whoever's doing your payroll, and you should be able to find a way not to pay those payroll taxes. And then again, 50% is due at the end of next year, and the other 50% is due at the end of 2022. And we've had luck just telling clients to contact your payroll company, and they've been able to handle that for them. That's really easy.
Okay. A couple other questions that have come through. So what if you're, actually that's going to be for bucket number 2. I don't know if there's any other 8 questions on this. We have one that says, how do we know which payroll should be taken from the funds since our release date of the funds started in the middle of a payroll cycle? I don't know if that's really for A. But...
You want me to field this one, Jack?
Yeah.
So this question I saw, this is a good question. It comes up with everyone. This is really what I call the accrual versus cash basis question. And what the question is, the act, the way it's written is not entirely clear. It appears to be written in a cash basis. So why couldn't I effectively jam up that 8-week period with more expenses of one type or another in a way that would advantage myself? For example, suppose you have payroll such that your payroll costs versus your other allowable costs are, say, 70%, and that's 75%. So now your payroll is actually limiting your forgiveness calculation because you can only, 75% of your forgiveness has to be on payroll. Well, why couldn't I move some lease payments into the period of time to increase my other category? Wouldn't that help me? Wouldn't that be an advantage? Or maybe I should move some payroll into that period to increase my payroll cost during that period of time. All of that makes some sense, and I understand it. We don't know the answer. We know that the statute is written on a cash basis right now. But we also look at it and we say a reasonable person, and we haven't gotten the regs. The regs are going to be out in the next couple of weeks. I mean, of course they're going to address that issue, and you would think that a reasonable person would look at some normalization of expenses over that 8-week period. So I would be fairly cautious about what you're doing, and I would simply, at this point in time, move forward on the basis of a cash basis. I wouldn't try to accelerate costs in some unusual fashion or fashion that's out of the norm, because I think that's going to be captured when the regs come out. Hopefully I answered that.
Okay. Cool.
Can I
starting to realize.
I just want to make one general statement, and I think Chris nailed it too, and that is everything we talk about with forgiveness right now not everything, but 90% of it, we don't know for sure until the guidance comes out. And I was actually supposed to do a seminar last week, and they canceled it because no guidance has come out yet. And then they had the seminar, and they did it the other day, and the first thing they said was, here's what we think is going to happen, how it's going to work based on past experience and us reading the actual law. But until the statutes come out from the SBA and the federal government, things could change. So just be cognizant of that.
Okay. Look, these questions are coming through like all sorts of different times. Let's actually run through the 4 buckets and then just take the questions, so I don't, because I'm going to jam this up otherwise. So Clark, can you pull up presentation? Let's do B, C, and D. Let's just crank through them, and then we can start to attack these questions. Am I screen sharing or are you? You are, right? Yep, there we go. All right, second bucket on here. The government ATM machine jammed, okay? So this is basically about you do apply for, or you do qualify for PPP, you know, and either you're stuck somewhere between the government didn't have money and so you didn't get approved. Maybe you're with a couple of the banks. I know a few of them. M&T, I think, got most of them done. I don't know. We're not trying to throw any banks under the bus, but a bunch of banks just didn't have their shit together, basically. So, you know, so what do you do, right? Like, I do qualify for PPP. This is the best thing for me. I either don't have it or I'm waiting. Should I be freaking out? I don't know. You know, but that's basically what we're talking about in this bucket. So Cory and Chris, I don't know which one you guys want to grab and start with it.
Cory, why don't you go get started? I can follow up.
Okay. All right. So what I tell, and I have probably 60% of the clients that I helped out with PPP applications got it, and about 40% didn't, even though some of them submitted their application on the front end. And I don't see any rhyme or reason for who got approved and who didn't. Some banks did do better than other banks, but I will tell you this, be nice to your bank. They were put in a bad spot. They pushed through a multi-trillion-dollar stimulus package in a couple of days, and the banks didn't have guidance and things were changing every day. So they weren't really put in a very good position. And I know they all tried. Some did a lot better than others. But that being said, I tell clients, time out, calm down. Even if you didn't get PPP money, there are other things to do. One is if you are eligible for PPP and you didn't get it, make sure you have your application in, make sure you communicate with your bank, because there is this another tranche coming that supposedly the Senate signed off on, and I don't think the House has passed yet, but the president said he's going to sign it. And it should be coming. Make sure your application is complete, accurate. Your bank is ready to submit it to the SBA and in that queue. That's going to be your best bet. If that doesn't happen, then no matter what, look at that payroll tax deferral. There are more funds being allocated to the emergency disaster loan. That is an avenue you can explore. The ECIDA just announced a loan package through them. I saw it for the first time a day or two ago. I don't know a lot about it, but they're advertising. If you Google it, you can find it. There's also the Main Street program that is coming out, and there's the employee retention credit. So if you keep employees on payroll, you can go after this employee retention credit if you didn't get PPP. So my biggest advice is don't worry about it. Go after other things, or maybe you'll get it in the second tranche. Does that help, Zach or Jack?
Yeah, I think it did. You know, Cory, one, you probably are a great T-ball coach, giving everybody credit, but the truth is some banks did well and some didn't.
They were put in a bad spot, though.
Sure. Okay, that's light, right? Tell this to the people that didn't get any money. Two, you know, I personally, I don't know if this is right or wrong, but I put applications into multiple banks, you know, and you know, I had the good bank reps actually told me, hey, look, we're slow, go somewhere else. And they earned a lot of kudos with me personally. I know you're going to say that was a bad idea, but you know what? I won like 10 for 10 with companies doing this. So it at least worked. You know, how long have you seen it taking for banks to actually, once there's been a confirmation for the money to actually roll out? Has it been a week or 10 days, or have you seen it happening faster than that from approval to funding?
Depends on the bank, really. I mean, I've seen anywhere from a couple of days to a week or two.
Gotcha.
It just, there's no rhyme or reason to it at all.
So Jack, a couple things, and it's probably worth walking through some of the defined terms too.
Sure.
And Cory, tell me if you feel any differently, but if someone has an application in now, they've made an application to the bank, particularly with more funding equal to the size of the initial funding about to hit, I would never under any circumstances suggest that they don't leave that application in or try something else. I think they should have agreed. Okay, good. Yeah, because that just doesn't make any sense to me. And the reason let me walk through the process. So what it appears, and we don't know this for sure, but it appears that the bigger banks were all allocated a certain amount of money. And what it appears is that even if a bigger bank with a certain pool of money didn't move as fast as some other banks, that bank still had that pool of money. And while their applications were going through more slowly, they actually still had the same amount of money to deploy. So being in line with a bank probably makes sense or has an effect on the outcome. The other thing is there's really a several-step dance here. You put in your application to the bank approves that application, and then you receive an SBA authorization number. That is a good thing. That SBA authorization number means you have been moved to the SBA and you are somewhere in the SBA's list of people who are going to receive money, and there's some sort of queue there, is what we believe. So again, I wouldn't be upsetting that queue at all. That's a good thing. That's still not approval. Approval, which is really important. I mean, that is an incredibly important under the Act, what that means. Approval, we've been treating, although it hasn't been defined, as occurring when the SBA comes back to your bank and says to your bank, go ahead and fund this party. When the bank gets that, they send you documentation. To us, that's approval. When I say us, I mean me, really, but I think Cory agrees with me. Why is that approval date really important? The approval date's really important because it starts either a 5 or 10 day clock. Once again, whether you listen to the Treasury or the SBA, nobody's figured that out. But your bank is going to tell you 5 or 10 days from now you have to draw down the money. That's why that approval is a critical thing. Now, next question on when your documents come to you, everyone's going to want to know, hey, I just got a bunch of documents from my bank. Do I need a lawyer to look at that, right? That is obviously something. And I'm never going to tell you not to get a lawyer to look at bank documents. I can also tell you that I've reviewed, 10, 12, 15 notes at this point in time. And I have yet to make a change to a set of documents coming to me under the Payment Protection Program loan and say you need to make this. There was one set of documents that came to me that required that they initiate the forgiveness within 120 days of lending, and I asked to have that pushed back to 180 days. That's a non-material term. What you don't want to do is get in the business of saying no, because no means you rejected an offer, and that means they could pull it, right? I have yet to find anything that was critical, material, worth editing, truly. So all my clients who I've looked through documents have effectively gotten move forward with this. So a little bit on all that, and hopefully that's useful.
Good.
A couple of the questions, and I think this kind of piggybacks off our subject, is I actually asked a bank that was accepting new customers. It was a smaller local bank. If they would take a client of mine that had been at a different bank and didn't get accepted yet because the funds ran out. And they said, honestly, I'd love to take on a new customer, and we'll talk to that customer in a week or two about the rest of their loan portfolio, possibly. But they said your best bet to get money is to stay with the bank that you already have an application in at. And that was a bank that could have gotten a new client, but they said, honestly, here's what's best for your client. So if you're in line, stay in line where you are.
Hey, we got a question. Somebody sent me a private question. So it was somebody that said, I received note that I got the loan and I'm waiting for the DocuSign doc. However, I'm not sure I applied correctly. This person's an LLC sole proprietor and they have about 20 subcontractors they use every year and issue 1099s to all of them, but do not use a traditional payroll company. They submit all the 1099s in their own Schedule C themselves. They believe that they're eligible to apply just with the Schedule C, but they don't want to, go rocking the apple cart by saying something to the bank, thinking their error will be caught and they'll lose their position in line.
So, Cory, I can't wait to hear your response to this. I have a thought on this as well, and I think they're in a very gray area which way I go. So I'm very interested in what you have to say. How have you been advising this one? Because I know how I advise when there are 1 or 2 or 3 subcontractors, but when you get to that number, I'll be interested in what you've been doing.
I haven't had this exact situation come up yet. I think we were on this pretty quickly. But just shoot from the hip here. What I'm thinking is you keep your position in line. You take the money, and then once you get funded, you immediately pay back the excess amount that was based on the 1099 income that you reported as wages to get the inflated number, and you just rely on your net Schedule C, which would be maxed out at a comp of $100 grand a year. I feel like that is the best way to go, because if you come out of line now, you might be SOL. Chris, feel free to.
No, I think that makes a lot of sense. The fact pattern that I was talking about, and the reason I chickened out of this one, Cory, one is you've seen a lot more applications than I have. The reason that I thought this was so hard is because of the number of subcontractors, right? So let me change the fact pattern dramatically. Let's say that you are a construction company, a small construction company. You have 4 or 5 employees, and you have 1 or 2 subcontractors that work for you 30 some odd hours a week. Now, my reading of the statute and the guidance that's come out, Cory, is that the government doesn't want those 1 or 2 subcontractors to apply separately, and you can include them in your payroll costs and you can move forward. When it becomes a situation where it might be a software company, then maybe they have 30 or 40 subcontractors and very few employees, I think it's a much grayer, much more difficult issue. And that's why I thought that was a tough situation. The government came out with that guidance and said that they would, and by the way, the statute itself allows you to include sole proprietors and independent contractors. And I've taken that to mean a small number of sole proprietors and independent contractors would be acceptable. Your thoughts on that?
I'd see what happens if. I don't disagree with any of it. And that's the thing. Nobody knows. I mean, we're trying to work in the best. Your bank doesn't know either. That's the problem.
Yep.
But there definitely is language in there that said instead of having everyone apply, if you can apply at a top level, that makes more sense because it's a less administrative burden on the bank. That's why, because there was a question about partner income. Does each individual partner apply because they have self-employment income on their return, or does a partnership include the partner at their level? Another one that I never saw answered anywhere was if you have an insurance agent, particularly life insurance agencies. There's a bunch of big life insurance agency companies around here. They get a statutory W-2, which is the W-2, but it's actually the income shows up on a Schedule C and you can take expenses against it. And the W-2 says the home office. So if it's a Guardian company, it says Guardian, not the actual financial firm, or if it's Mass Mutual, it says Mass Mutual, not the actual financial firm that's local here in Buffalo. And nobody really knew, it never answered, is that wages of the local company, or is it a Schedule C that the individual claims? There's no guidance on that one. So that's interesting as well.
While we're on this topic, though, let's hit PEOs.
Yeah.
I think that's worthwhile.
Yeah.
There was certainly some question and concern.
Chris, wait. So just to be clear, PEOs are like, if you have a partial employment organization, just so everybody on the phone knows what we're talking about, right? So this could be, name a couple of the PEOs in town.
Alcott, ESC.
Alcott, ESD, Aileron does a little bit of that. So just so everybody knows what we're talking about. If you don't know what it is, you don't have to worry about it.
Yeah, Jack, you're spot on. If you don't know, you don't have to worry about it. But if you do know, the reason it's relevant, the reason it fits in here is because the whole game of a PEO is you don't actually directly employ the people, or the PEO does. And so the question that happened with a number of companies is, well, half my payroll or most of my payroll is handled through this PEO. Do I even have payroll costs? How do I handle this? Because I sure feel like I have payroll costs. I pay all these people and they show up every day. And the answer with PEOs is PEOs are payroll costs. The next issue that comes up with PEOs is, gee, my loan got approved on Tuesday. Well, let me give you a different fact. My loan got approved on Wednesday. I send the money to my PEO on Tuesday, and they pay my employees on Thursday afternoon or Friday. So does that money that left my account on Tuesday when my loan got approved starting the 8-week clock on Wednesday, but it actually didn't get to my employees' hands until 2 or 3 days later, is that a payroll cost during the 8-week period? I've had that a number of times. And I've taken the position that, listen, it's not unreasonable to say that was a payroll cost. We don't have the answer to that. No one knows the answer to that. But at the same time, your employees, your PEO employees, didn't receive that until Thursday or Friday, clearly after your loan was approved. Why not take the more favorable position on that? That's as reasonable as anything. So I've taken that position, and my argument from a legal perspective would have been, hey, if the wire services all broke down and your employees didn't get the money wired on Thursday or Friday, your PEO would have been obligated to give it back to you anyway. So I think it's a fair position to take. But anyways, Jack, I was hitting an unasked question.
Yep. No, it's good. And just to be clear in all of this, right? I mean, Cory and Chrstian are great guys, and they're giving you advice, right? I mean, you all should have an accountant and a lawyer and be having conversations with them. It's important that you get an opinion on this, an opinion that's thought out, because the most important thing is if somebody comes knocking on your door and you have this, is that you've got some evidence that you tried, right? And you've got some type of professional background on it. So if you're concerned, this does not skirt you around you calling your own accountant or own lawyer. This gives you an idea and a semblance of a couple people's ideas and a couple data points. Don't take it as anything more than that. Okay?
Jack, I just want to piggyback off of you. I deal with, one of my specialties is business development incentives. So tax credit programs, all that kind of stuff. And these things change all the time and the rules change. And at the beginning, there's no guidance. What I tell clients with this program and other programs, whether you want to talk about opportunity zones or whatever, operate within the spirit of the program. What is the spirit of the program? The spirit of the
100%.
program is to keep people employed. Don't lay them off. Don't furlough them. Don't reduce their hours or their compensation. And if you do that, then you'll be rewarded. Or if you've already laid people off and you bring them back, you'll be rewarded. So operate within the spirit of the program. And then if and when guidance comes out definitively that you did something a little off, change immediately to follow the guidance and then continue on, and you should be good. That's my generalistic, holistic advice for people. And if you need questions, I will do taxes for beer. So.
Geez, I thought you were going to flash everybody. I was like, oh boy. All right.
So let me follow on something Cory said, because I think it's really important advice and very good advice. There's a really important, that may not apply to most people on the phone, but there are certifications that are being made at the front end of this loan and the application, and we don't know what some of them mean. And the most obvious is the certification that you're making that says that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. We don't know what that means beyond what it says. And just a few thoughts for you on that certification you're making. Current economic uncertainty. Okay, seems pretty obvious. That's out there. Loan request necessary to support ongoing operations. Well, I just laid off 20 out of 40 employees. I need the PPP to be able to get them back. Okay, sounds pretty good. But what happens if your annual operations budget is $5 million and you have $1 million in cash? You only had to lay off half your people. Does the fact that you were that liquid at the time you laid people off make it no longer necessary? No one knows the answer to that question. Obviously, there was a serious impact. The flip side of that, what if you are not liquid at all and you absolutely need the money, but your operations are not too bad? You know, you're down 15%. You're not down 40% or 60%. Your revenue's down 15%. Is that enough? Again, no one knows the answer to that question. What I would do in that circumstance, again, piggybacking on what Cory said, is absolutely document what you did, when you did it, and why you did it. I looked at this current economic uncertainty, and I was told that there was no guidance beyond this one sentence. Okay, fair enough. I made the decision for these reasons. Write it down. Write it down in an email to your accountant. Write it down in an email to your fellow managers. Write it down to yourself in a memo. And at a minimum, what that's doing is putting you in a position where you weren't acting in bad faith. If you had a decent reason, you went through a reasonable process, and the government hadn't given you decent guidance. That could be very, very helpful down the road. So that's one piece of advice and the other piece of advice I give you is a number of law firms looking at this have looked at previous incentive programs, and they've said, who are the people who've gotten in trouble? Clearly, as Cory said, the people who strayed from the spirit are potentially going to get in trouble. But most of the people get in trouble because of whistleblowers. And quite frankly, most of the whistleblowers are their employees. So when I'm talking to a client about something that is very fairly in the gray area, we don't know if it's right or wrong, one of the things we ask ourselves is, how's this going to look to our employees? How is this going to look to the business's employees? If the business's employees are going to look at this act and say, looks fair to me, makes sense to me, seems to be what was within the spirit of this program, the risk profile, the likelihood of there being a whistleblower drops way off because nobody's thinking about it. But if it's one of those, hey, I think it fits the letter, I think it might work, but it just looks funny, it doesn't feel right, and by the way, my employees are likely to not think it's appropriate, that's when, quite frankly, there's more risk. Because your greatest chance of having some sort of investigation is as a result of an employee sending in a whistleblower complaint.
Don't piss off your employees.
Yes, that's right.
All right, good. We got 20 minutes and 2 more buckets. One thing, just as we transition into the next 2, this is just a word of advice. Assume the grant will not get forgiven. Assume it's going to be a loan, right? Just assume that for right now, because if you start banking on it and you're wrong, you're up shit's creek a second time, right? And there's no such thing as third chances. All right, next bucket. Clark, can you pull up the presentation, please? All right, how to use your loot. So we've kind of talked about this a little bit. Where can the funds be applied? How can they be applied? There's been a bunch of questions that have come through from both the initial allotment and what's going to be timing on the new allotment. But let's just break down a little bit what you can use the money for and what you cannot use it for, using some bright lines.
Okay, so In bright lines. Yeah, good. Nice. Thanks for the bright line comment, but that isn't happening. We'll give you some good general guidance, and the bright lines are, every line's fairly gray, quite frankly. Payroll costs, insurance premiums, healthcare benefits, salaries, commissions to employees, payment of interest on mortgage obligations, rent, utilities, and interestingly, and keep an asterisk on this, interest on any other debt incurred prior to February 15th. Now, note that that is what you are allowed to use it for. For the most part, that is also what you have an opportunity to be forgiven for. But there are some caveats. First of all, I gave you an asterisk on the interest on other debt incurred before February 15th. That is not part of the forgiveness calculation. Secondly, I mentioned to you before, and we'll get into this in the next bucket, but you're limited on forgiveness. 75% of the forgiveness amount must be payroll costs. So I won't go any further into forgiveness because that's the next bucket, but what I want you to be cognizant of is allowable uses and forgivable uses, and forgivable amounts are two different things. I also want to flag one issue for you that I dearly hope will go away, but I do want you to be aware of it, is allowable uses right now, believe it or not, under the statute, ends on June 30th, 2020. Now, if you're thinking, hey, my application hasn't gotten approved, mine might not get approved till May 15th, and May 15th is not 8 weeks from June 30th, and you're worried about that, you should be. I would like to think the regs would get that straight. I would think the government's going to fix that. I think there's a low probability of it not getting fixed, but just keep in mind that right now, no payment made after June 30th until this gets changed, which hopefully it will, is an allowable use.
Gotcha. Can you, a bunch of people have asked this, do you have to bring back, if you're bringing back or keeping employees, can you make changes like you typically would running your business? Or does it need to be the same people, right? I laid off Sammy, Willie, and Tony. Do I got to bring those three guys back?
No, different people, anyone, FTEs.
Is there a nepotism clause in here?
No, I haven't seen one, but.
Okay, you can hire your kid. Okay.
Yes.
These are the questions people want to know, right?
Well, listen, you want to talk about gamesmanship on the margins. Listen, if you are a small business owner, you've got 3 kids, 18 to 22 that are home from college, and you're trying to get back to 100% forgiveness and maximize your FTE calculation, and you want to hire your kids, there's nothing in the statute that prohibits that. In fact, quite the contrary, the statute would say it was fine. I would always tell you that pigs get fat and hogs get slaughtered. I would tell you that if you're hiring 2 or 3 people, giving them payroll, bringing them back for the FTE calculation, I don't think anyone's going to care, and there's nothing in the statute that prohibits that. But if you want to take it to an extreme, I'm sure you can create a fact pattern that make me a little concerned for you.
Okay,
Hey, Jack,
there are a lot of...
I get this question a lot from clients because they're worried that some of their people might not feel safe coming back.
Yep.
They may want to stay at home. They might get pushed back from their employees because they might be earning more money on unemployment, something like that. That gets into a whole nother conversation though. So I have not seen any that. I agree with Chris 100%. There's no matching principle on person to person.
But just playing off of what Cory just said, if an employee won't come back and you want them back for the forgiveness calculation, pay them to stay at home and give them whatever work you can and tell them their job is to stay at home. The other thing, Cory, what was the second thing you brought up? Because I really wanted to speak to that. Besides the paying and the employee, what was the other one?
Not feeling safe?
No, there's another one about, you had another fact pattern there. I can't quite remember. I'm sorry. It was something that's come up. I can't remember now. It doesn't matter. We'll move on. We've got plenty of things to talk about.
Okay. For individuals, can an individual be a W-2 in more than one location, more than one company?
Yep.
And we keep saying FTEs. So an FTE is qualified as what? Somebody asked the question: does it need to be 40 hours a week? Can it be 30 hours a week? How do you define
30.
it?
It's 30, and there's a definition for the only definition we have for a full-time equivalent is the SBA's definition. There's a definition in the SBA regs. We looked it up. I don't remember the citation right now, but it's effectively 30 hours a week.
Gotcha. If you have a company with 2 employees and one makes 50 grand, the other one makes 150 grand, are you able to decrease the salary of the $100,000 employee as long as you continue to pay the other employee their normal amount down to 100K and still get full forgiveness? Okay. Can you take the 50,000 you were going to give to the one guy and pay them both 100 grand? That's okay. In order to max out the calculation. Okay.
Corey's nodding just for people who are audio only.
Oh, sorry.
Yeah, Jack, let me jump in a couple things that you.
Okay.
One thing
Let's make it snappy though. Let's make it quick. Yeah.
Oh, take it easy. These people, if they want to hang on, they can hang on.
Yeah, we'll go past the hour if we need to.
Yeah. Oh, I'm not limiting this. The one thing you raised, which I think a lot of people will have, is what happens if the people who are coming back. I've had this in a few of my machine shops. I have 30 or 40 employees. 10 of them just don't feel comfortable. I really feel like these other people are working their ass off, and I want to bonus them some money. Again, this is where the pigs get fat, hogs get slaughtered. I have been telling people that there is nothing prohibiting you from giving people a 10% bump, a meaningful bonus to thank them for effectively what amounts to kind of hazardous duty pay. Nothing wrong with that, but I do think that on extremes there'd be a problem. So that's something that I think people can do, and a lot of people have had that question.
Just throw another thing out there is there was a provision if you want to give an employee a one-time payment to help them pay their household expenses, that's actually excludable under the CARES Act. So if somebody's doing a good job, or you're afraid that they're not going to be able to afford to live at home on whatever they're getting from unemployment or from their employment now, you can give them a $500 payment, and that doesn't count towards salary, like if it's over and above. And that was actually part of the CARES Act.
Okay.
So
Cool.
I had a manufacturer that laid off 120 people, and he gave everybody $200 cash and 2 chickens from the market.
Good. Chicken dealers. All right. The window starts when? Is the window start when you get approved? I mean, like literally, how do you know what day the bank gives you the money? Is it literally you go into your online banking account and you're like, oh, the money got deposited yesterday, right?
That is the funding date, and the statute is absolutely clear. One of the very few things. Notice I haven't said that yet today. We've been talking for 48 minutes. I have not yet said the statute is absolutely clear on something.
Nothing is being
right now. The 8-week period starts on the moment you receive funding. The statute is beyond clear on that.
Gotcha. Cool. All right.
It is nice. It's useful. We've got 1 point in the sand.
Yeah. No, that's good. All right. Can you go to your bank and ask them to hold up the funding date if you have a relationship with them? If you got approved, and have you seen that happen where someone goes, look, I'm trying to, get the office together. It's a mess, right? Can you do this on May 1st? No.
If you remember the SBA has a requirement that the bank has to fund within 5 days according to the SBA, 10 days according to Treasury. But it's either way, it's a small window after approval. Approval means when you get the documents. So the dance is I get the documents, I have 5 to 10 days, I have to receive funding within that period of time.
You can't just sit on the dock.
No.
It's a bad idea anyways. You don't want to be construed as saying no or anything like that. A couple of days.
Are all the docs going digital? I mean, is there anybody using paper docs?
Coming by email, all my clients, I haven't really asked.
I should check with the Amish down in Ohio and figure out what the hell they're doing. All right. So let's jump into 4 or D, or 4D, whatever, 4 or D.
Forgiveness.
Yeah, please forgive me. right? Classic rock ballad. We should all listen to it later. How do we make this money free? So obviously you guys have talked about, like, this is all going to be in the spirit of, you notice that was all Buffalo Bills colors? It's all Buffalo Bills colors. It's all in the spirit of, like, look, like, there's one thing to get the money, there's another thing to make it, you know, forgivable, right? And honestly, this comes down to, we're all smart people, we all have good judgment. If we think we don't deserve it, we probably don't deserve it. If we think we do deserve it, we might deserve it, right? It's probably, that's a good judgment call. But can you guys talk a little bit about just, Chrstian, I know you talked about this a little bit, but, like, you know, what are the blatant things that we know make forgivable, right? So, like, let's say today's 4/22. You know, if we get off this call and we see that we got money deposited in our account today, what can we do in order to make that start happening, right? So let me know.
So let me give you the broad brushstrokes on the forgiveness calculation. The broad brushstroke on the forgiveness calculation is, for the most part, the allowable uses for the loan will be forgiven based on a calculation in which is the percentage of FTEs you have, I'm going to say, in comparison to your normal payroll. There are actually two periods that you compare against. So if you have a 40-person payroll, the day you get the money, you have a 20-person payroll, and you keep it at 20 people, you're going to get forgiven 50%. What you want to do is get your payroll back up to 40, right? So the basic playbook is get your payroll back to 100%. It's an average FTE count over the 8-week period. So I get my money on Tuesday. I didn't get my payroll back to 100% until the following Monday. That's not going to hit you very hard. You're basically going to be fine. Now, I can wax poetic for 20 minutes about the nuances of the forgiveness calculation, but that is the basic brushstrokes of how it happens. Two other things I would offer to you. 75% of it has to be payroll costs. So if my fact pattern I gave you before, if 60% of your typical expenses in a month are payroll, guess what? That's going to cap. It's going to cap what your allowable uses or your forgivable uses are. And then the final thing I would say to you is, in the documents that I don't think you received, Clark, I think you're circulating documents that we sent over that people would find useful. There is a 4-page document that came out from the U.S. Chamber of Commerce right at the beginning of the crisis. It's probably the best single document that you can possibly look at about PPP loans. They got it right from the beginning. They don't have every detail in here, but for the most part, 90% of the businesses could know nothing more than what's in these 4 pages, and you'll be fine, including the forgiveness calculation.
So just to follow on that, I'll be sending out a recording of the webinar and the documents that were just mentioned. So check your email, make sure it doesn't go into your spam folder. It'll be out within 24 hours.
That U.S. Chamber of Commerce, it's called Coronavirus Emergency Loans. That 4-page document came out at the end of March, and best single document I've seen yet in the crisis.
I want to, there was a rumor out there too, I don't know where it came from. I think it may have come from bad guidance from one of the banks. People thought if you didn't hit 75% of your loan as payroll, then you got nothing forgiven. That is not the case. I've heard about 10 people ask me that question.
100% wrong.
You don't have, there's no like, if I don't hit 20% or 50%, then you get nothing. Everything is pro rata. So again, like Chris said, if you kind of go back to history and your payroll stays at the same level and your number of people stay at the same level, you're going to get a lot forgiven. And I found this out the other day too, the 75%, one of the places that came from is your base period is over 2.5 weeks because you do your payroll times 2.5, and your measurement period for after you get your loan is only 8 weeks. And if you take the number of days, those 8 weeks is 75% of your base period of 2.5 months. So that's where the 75% concept came from.
Okay.
Do we have questions? I see 1,000.
Yeah, no, no, there's a ton of them, but a bunch of them were redundant. So if you got all this, again, like, does it matter how much you pay the employees when they come back? So if I had 3 employees that were making $40,000 a year, and I bring 3 of them back, and now 2 of them are only working 30 hours a week instead of 40, so I'm paying them $30,000, and one guy's working a bunch of overtime, he's working 50 hours a week, and I'm paying him the equivalent of $50,000. That all flies? Or no?
I wasn't following your fact pattern entirely, but let me give you one more requirement. When you bring people back, you have to bring them back at 75% of their salary, or else they don't count for the FTE calculation. That is a requirement. Yeah. So it's when you bring people back, if you're going, you can reduce their comp. You want to reduce it down to 75%, it's fine, but don't go below 75%, or they will not count. Or I shouldn't say they will not count. There's actually a reduction and it's based on a sliding scale. It's all part of the complications of the forgiveness calculation. I mean, there's a lot of detail in this forgiveness calculation I glossed over. But when you bring people back, keep them above 75%, and you'll be fine.
Okay. And for people that make over $100,000 a year, do they just not even count, or is it the part of them that's $100,000 a year or less that does count?
I love that. So they count and they don't count. They don't count for the FTE calculation. So, Jack, in your business where you're making $500,000 and you have 4 employees, they're each making $20,000. You only have to bring back. Right. Yeah. I just want to pick on you, Jack. But you only have to bring back those 4 people are the only ones that count for the FTE calculation. Once you're above, the $100,000 people don't count for the FTE calculation. However, they do count in the sense of the payroll, the forgivable costs. So $100,000 worth of their salary on an 8-week prorated basis will be forgivable and is an allowable use for the funding. Okay,
gotcha. You can also fire all your expensive people. And
yes, that's exactly right. Said in the opposite way that I was tweaking you. Yes, you can get rid of all your management and bring back your workers, and as long as the people you got rid of were above $100,000, they will not affect your FTE count.
So
it's like the government is.
Jack, I just want to jump in here. So there's a question right now, because one of the topics that we said we were going to cover was, what we should be doing for record keeping for forgiveness. Can we go through that? Because that was one of the things that was billed and we haven't really talked about it.
Sure. Hey, Cory, you've been really working on this. You want to cover this, and I'll fill in anything if I think there's something else to add. But yeah,
sounds good. One of the biggest questions that I have gotten is, do I have to have a separate bank account? The answer is you don't have to have a separate bank account to put these funds in. And if you do, fine, that's like personal preference. But pretend you're getting audited by the IRS or a independent CPA is doing a review or an audit of your financial statements. You need source documentation to support the expenses that you're going to claim for forgiveness. What does that mean? Well, if I'm paying payroll, I want to see a payroll report from ADP or Paychex or whoever you use. A lot of tech companies are on here, so they might use Gusto. Make sure you have those payroll reports that show the amount of money coming out of your bank account. Make sure that matches your bank records dollar for dollar. Make sure those payroll records also have hours worked. Hours worked by employee are going to be very, very important. Salary by employee is going to be very important. If you are claiming rent, any debt payments, utility payments, you're going to want to keep a copy of that invoice or that bill, and then some sort of document to show that payment came out of your bank account as well. So go back to the source. You can't just hand somebody like a credit card statement. You got to have the credit card statement or the bank statement and the bill to support that. Does that make sense?
100%. Might be worth talking about affiliation problems too. I don't know if any people on the call have businesses that are large enough to get affiliated with other businesses, but it's probably worth touching upon. There is a threshold for eligibility of the loan. The baseline threshold rule is 500 employees. And it may be that most people on the call are saying, I don't have to worry about that. But if you have a couple hundred employees and your father is an owner in your business and he's also an owner in your brother's business and he has a couple hundred employees, you two could be affiliates and getting close to that 500 threshold. I had a business, a local business, which isn't small, but just employee intensive. And they were potentially getting affiliated with a construction company that was an investor. So what's the basic affiliation rule? First of all, there was a lot going out before. There were two different tests. There was a 201 test, and I'll call it the 301 test using the section references. The more forgiving 301 test is the one to pay attention to. Basically, under that test, if you have less than 50%, you don't have negative voting control in the sense that you could, one person can block, one person is more than 50%, or one person controls the board. If you don't have those types of controls, you're probably fine. With that one business I was talking about, we removed the relevant party from the board. He quickly sold some equity, so he dropped below 50%, and we removed some voting rights from the LLC agreement to make sure that they were no longer affiliated. Everything was completely legit. What we did was very substantive. We changed the reality of the contractual rights, but that's what we had to do to avoid that affiliation problem.
Just to piggyback on the subject of affiliation, I think I saw some comments or questions on this. If you have foreign ownership, at first there was a thought that you could not apply to PPP. That is incorrect. You can have foreign ownership. The caveat is that the employees that you claim the loan on and the forgiveness on have to be residents and working in the U.S. That's the caveat. In another thing that I saw in there is some banks were asking for all ownership, even like if you own 0.5%, and if you had 300 owners, that was a big pain in the you-know-what. Workaround, if you're in that situation, what I've done in the past is put a couple of the big owners on there, make it add it up to 100%, and then attach a statement with the actual ownership saying, here's the actual ownership. It saves a lot of time, and I haven't had a problem with that.
Hey, we had a question come across. How do we pay the interest for the loans? Like, when do we actually start paying on these things? How do we do it?
Great question. We've ignored that because everybody's been so focused on getting the loan and the forgiveness rules. Payments don't start until 6 months after receipt of funds. It's amortized. It's 1%. It's amortized over the remaining 18 months. So, whatever portion is not forgiven, you can still keep as a low interest loan, and then you effectively pay it back over 2 years. So the game, and if you've been thinking about this, the hope would be that you get the money, you use it for 8 weeks, you immediately put in for forgiveness. Hopefully something like month 4 or month 5, you've received your forgiveness. Hopefully that's for the majority of the loan. And then you might have a modest amount left over that, quite frankly, you hang on to because it's a low interest unsecured loan, and that's the route you're going to take. Some companies that have senior lenders, the senior lenders are saying to the company, it's okay to take this PPP loan, but one way or another, before 6 months, you're either paying it back or it's forgiven. They won't actually let you keep that low interest loan outstanding, or at least they're requiring you they're requiring you to covenant that to that effect when you take out the loan.
Cool. Somebody asked, can you combine 2 part-time employees into 1 full-time employee? 2 15-hour-week people to 1 30-hour-week person? You can?
Yes.
Well,
So what denomination does that work, right? I mean, if can I have 6 people at 5 hours each make 1 FTE? I mean, at what point does that become too ridiculous? Who knows?
I haven't seen anything that says you can't have a bunch of, like, 5 people make 1 FTE. I mean, go back to the old Empire Zone rules. There was the old Empire Zone rules. You added people together and they equaled the FTEs. I'm going to use a bad word. Everybody hates the Empire Zones, but very similar calc based on 35 hours a week instead of 30.
Okay. So when the FTE calculation that is done, the number of FTEs you got to get back to, that is the number of FTEs you had when? Is that the number you put in your loan application? Is that like what is it?
okay, you asked for more complication. It's comparison to one of 2 periods. So you take the number, you take the average number over the 8 weeks. That's your numerator. Your denominator is your average number between February 15th, 2019 and June 30th, 2019, or January 1, 2020 and February 29th, 2020. You compare it to one of those 2 periods unless you're a seasonal employer, and then there's another calculation.
How does it work with hourly employees? Like if
what do you mean by that?
Come in and they're W-2, but they work sporadically. You know.
Well, that gets back to the combining of the FTEs that you and Cory were talking about.
And so if you do your application and you say, and you misinterpreted FTEs as the number of souls that work for the company, regardless of the amount of time, should you go back and correct your application? Or if you made any other issues to your application, should you go back and correct it, or what do you do?
So Cory, yeah, I see you shaking your head, Cory. I'll tell you what I would do, and I think the advice I think your and my advice would be the same. First, I would calculate what it should have been. I would accept the money in the sense that I would get it in my bank account, and I would determine by what amount it was over. You know, I was basically, my allowable uses, my calculation was too large. If I have to give some money back, I give it back immediately. I report to the bank immediately and say, listen, you gave me $150,000. You should have only given me $120,000. I made a mistake. I'm ready to give you back $30,000 at any time.
Yeah, but just to be clear, the amount of cash of which you get is your payroll and all those other things over a set period.
Jack, I understand what you're saying. So your number of FTEs on your application on the front page isn't one of the 3 choices that Chris just talked about, the 2019 period, the 2020 period, or the seasonal period. That number's just
Yep.
It's probably wrong on 90% of the applications. So what's going to happen, in my opinion, is that on the back end, when you apply for loan forgiveness, at that point, you'll need to tighten up that application. If it's totally wrong, like Chris said, I would figure it out and report it to your bank sooner rather than later, operate in the spirit of the thing. But it's going to become key on the back end. And I have been in communication with about at least half the banks in the city to talk about the loan forgiveness calc, because the loan forgiveness calc is going to be 20 times more complicated than doing the front end calc. And we're still waiting guidance. Not totally sure, are the banks going to have to review all this stuff and document that it was accurate? I'm sure some banks will want to do that because that's their nature. Or is it going to be on the applicant, the bank rubber stamps it, and then it goes off somewhere to the SBA and then might come back and audit you? We still need to answer that question. And there's a lot of work to do on the back end. So make sure you get it accurate on the back end when you apply for forgiveness is my advice.
Hey, Jack, let me address a question that came in here that is a really good question, and I understand where it's coming from. Someone just said for forgiveness, no, excuse me. I heard if you furloughed employees in March, those are not considered in the PPP calculation for forgiveness. That's a great question. What that person is asking is what they heard was that within 30 days of enactment of the CARES Act, and that 30-day period ended on April 26th, or ends on April 26th, 4 days from now. there was a statement in the CARES Act that said, whatever you, effectively in this, it said, whatever you do with employees, hiring, firing, furloughing, whatever, we are not going to count that for purposes of the act as long as, at least until 30 days after enactment. So yes, it's true that if you furloughed people in March and in April, that's not going to affect you, but we're almost through that period. And starting April 26th, it does matter. So that sort of period of time where it wasn't going to affect the calculations in the act is about to run out. You need to be aware that yes, in the past it didn't harm you, and yes, it doesn't harm you now. But for example, if you let them go, you better hire them back after April 26th.
Gotcha. We have, what else do we have? So somebody was asking,
I just saw one of the talk about documentation, and we addressed that just a little while ago too, but also to piggyback a little bit off the front end conversation, when we talk, we don't know whether this is accrual method of accounting or cash method of accounting, and like kind of stick with cash method of accounting. One of my clients was asking me all these particular questions. Is we have to wait for guidance, because the way it's worded, you could construe it to mean accrual basis or cash basis or some combination of the two. And what one client was going to do is they were going to do a spreadsheet where they could track their expenses during the measurement period, 8-week period on the accrual basis and then the cash basis, and try and make sure they met both. So when guidance actually comes out, they'll be fine either way. And that's splitting hairs, but I actually saw a comment about that because they were asking about copies of invoices and an Excel sheet or something like that. So, but no matter what, you're going to get close if you keep.
Hey, Cory, let me ask you a question I don't think someone's asked, and I know you're going to tell me you don't know the answer to it. But this is a Section 265 question, which is what if the expenses, I had expenses that were forgiven when I got my forgiveness money back. Am I still allowed to deduct those when I file for my income tax at the end of the year?
Great question. We don't know yet, but my guess is yes, because when you do a tax credit, sometimes you'll have to like back off expenses. So in this case, if you get the money in and then you spend the money and you take an expense, in essence, it wouldn't be taxable anyways. You know what I mean? But they went above and beyond to actually quote in the statute that the loan forgiveness amount was not includable in gross income. So that lends me to believe that you will not get taxed on this grant income or loan forgiveness income and be able to deduct the expenses, but I don't know the answer to that question.
Keep an eye on it is what I would say. And I think that's the main, no one knows the answer to that question. And it's an important question. I mean, it's a question that's going to, has a real impact on your ultimate amount of, how much money's in your bank account after you pay your taxes at the end of tax year 2020. So I just keep an eye on it, pay attention to it.
Yep. And again, that's a pure guess, and I didn't make that up myself. I copied it from BDO. That was their guess.
All right, we are up on 2:15. Was there any major questions that we missed from anybody?
If somebody has a question, it's really, why don't you just retype it in right now, and we'll pay attention to what's sort of scrolling up and see if we can hit a few more.
Yeah.
It's really, calculation for seasonal EEs. Oh my gosh. You know what? Truthfully, I'm going to punt on the calculation for the seasonal EEs. I haven't had to deal with it. And the forgiveness calculation, some of these other calculations have been hard enough. I will tell you that there is a different calculation for seasonal employees. What I would do is I type in Google, I Google the heck out of it, and you probably can find some people who can help you. Unless you know that answer, Cory, I don't. I haven't had to deal with it.
No, I've been in those weeds more than I have.
For anybody that's got documents of interest or documents of use, email Clark or I. We'll probably be packaging this together and sending it out hopefully later today, if not tomorrow. So if anybody's got, a couple of people have mentioned, hey, I got a great spreadsheet, stuff like that. Happy to basket it together and pass it along to everybody.
It was Brandon Burke just asked a question we kind of dealt with before, and he's following up on it. He's asking in an interesting way. Allowable, so Brandon, the allowable uses is defined in section 1102, which ends on 630. The section 1106 has the forgiveness. So forgiveness is not limited by 630, but I would question whether, if you're not allowed to use something, forgiveness also breaks down. So until they expand the forgiveness, expand the 630 for allowable uses, forgivable expenses will also end on 630. And Dean, it was 30 hours on FTE.
And so to M, I might butcher this, Chipetta, you do not exclude payroll taxes paid by the employee from the computation. That was a big misnomer at the front end, and it's worded very clunky in the actual law, but guidance has come out on that now.
Marcy, you take your casual employees that work a few hours at a time, and you lump them together to get 130 hours a month or 30 hours a week, and that's how you calculate your FTEs. You basically start adding them up. And, I love there's another question in here just above it, utilities. So do utilities include telephone and cell phones, Cory? I've been telling people we're not sure about cell phones. We think we're almost certain the landline counts, but I've been telling everybody to treat cell phones as if they're utilities and just disclose.
I don't have anything more valuable than what you just gave people.
In other words, it's a bit of a guess. We're doing our best. Miners will take a reasonable position that's in your favor. Is what we were saying.
I saw something on transportation. The best guidance I've heard on this is don't deduct 50 or 60% of your transportation expenses for your Ferrari. But if you have fleet vehicles that are 100% used in business, like big pickup trucks for lawn care companies and things like that, that's what they're talking about with transportation expenses. But that's another subject where we need guidance to give definitive answers on.
So Kevin Curl, for $100,000 employees, are healthcare costs, bonuses, commissions, 401k match considered allowable? The answer is yes. Bonuses are part of your payroll, though, so that's part of your $100,000. But the healthcare and commissions would be part of your payroll too. But the 401k match and the healthcare you can include as well. Someone asked to review the FTE calculation again. It's 30 hours a week or 130 hours a month. It's that simple. And Brandon, if we don't use it by 6:30, you're hitting every aspect of this. We have to pay it back ASAP because you can't use the money. Yes, but I think when the regs come out, they're going to fix this. Cory can tell you that, this is something we were spotting on March 25th or March 23rd, and we've been saying for over a month, this can't survive. This can't survive because we could see the problems with the 8-week calculation, the forgiveness right away. So yes, you can't use it after 6:30 as of today, but I'm betting by 6:30 they fixed that problem. No, someone who's working 60 hours, I don't think is 2 FTEs, unless you tell me they are, Cory. I've been treating one person, huh?
One.
Yeah, that's what I've been doing it too. Yeah, yeah. There's a disclosure issue. If I calculate FTEs on a 40 hours and it's really 30, do I need to disclose up front? Well, no, you did it in a less favorable way there. You actually harmed yourself because you could have had more FTEs. I think, well, no, I guess, I don't know. It kind of cuts both ways, doesn't it? You know, it's an interesting one, Cory. I guess I'd be tempted, because it's about the forgiveness calculation, I just keep the same standard as you move through. Because if I calculate on a 40 to begin with, and if I stay on a 40, it's going to create the right proportions for me down the road. So I think I'd keep it the same way. But there isn't an answer for that. Yeah.
My thought is that all those FTE calcs are going to be redone on the back end when we apply for forgiveness. Because I think they're all wrong.
You know better than I do.
Okay, I mean, that's the thing. If you applied right away, guidance came out a week later that answered a ton of questions. I mean, the question about is partner comp included, that answer came out a couple days before the funds ran out. So you just don't know. And just to remind everyone, I do work for beer.
Wow, he's really pushing it.
So two people asked, what about insurances like general liability, workers' comp, and DBL?
I don't know that one for sure.
Yeah, I can tell you that I haven't seen insurance in the allowable uses. I'll check right now, but I don't think insurance is one of the allowable uses. Let me check.
No, don't go with Gusto's number. They mess stuff up all the time. I've had to amend anybody that uses Gusto in Startup New York, I've had to amend their W-2s for.
So Cory, here's a question for you. In the allowable uses, it says costs related to group health care benefits, paid, sick, medical, or family leave, and then it says and insurance premiums. And we've got someone asking, can I put my general liability? I read the allowable uses to mean costs related to employee, just the way, I mean, I'm trying to read in the spirit of this. So I think that's an example, general, you could make an argument that general liability, you could make that argument. I think it would be the wrong argument, and I think it'd be outside the spirit of what the Act intends, and I think you'd be being too aggressive. So I'd stay away from the general liability.
I agree.
Healthcare insurance premiums included in forgivable? Yes. Health insurance is. How far can we charge rent? How far back can we charge rent? I think you're thinking way too aggressively. So you're someone who's likely to get in some problems. I'm not going to read your name. And the reason I say that is because if you're working that hard to think about this, you're gonna create some problems for yourself. It's an 8-week period. What would be the rent that would normally fall during that 8-week period? That's it. You start playing a lot of games. I mean, I've got clients who have said to me things like, "Well, Chris, why don't I amend all my leases and front load the lease payments into this 8-week period and then have lower lease costs down the road?" And I say to them, I can't tell you there's anything in the statute that prohibits that, but the regs haven't come out, and I can't believe that's not going to get covered. It's too easy, and I think it's outside the spirit of the rule.
And it's probably to a related party. The best trick that one of the better tricks that I've heard that I think could work pretty well is a lot of people extend their business tax returns in order to allow the extension of a payment into a retirement plan for usually it's a profit share component to their 401k or something like that. And then they usually make it by September or October 15th with the due date of return. What you might be able to do is you might be able to make that deposit during your 8-week measurement period. And instead of having that expense prorated, you have the whole thing go in. But again, we got to wait for further guidance. But to me, that was one of the suggestions that made a lot of sense to me on how to maximize your your forgiveness count and your expenses in that period.
So there's another person that said we had a rent invoice on 4/1 but didn't pay it till we're refunded. Can we include that? That's a less aggressive version of the last question I answered. And listen, the way the statute is written, it's on a cash basis right now. There's nothing in the statute that prohibits that. But I would tell you that I have a hard time believing that you could have been late on a payment that you ordinarily paid on the 1st of the month. You didn't get funded till the 20th, and then suddenly you loaded the whole month into that 8-week period. I just have a hard time believing that's going to survive scrutiny. But there's nothing in the statute right now that I could tell you that would prohibit that. 8-week period starts. I'm sorry, funding. We've mentioned that a couple times. In fact, if you remember, it's the one thing I said you could be certain of. The 8-week period starts on funding.
Looks like Kevin's getting antsy. I see Kevin walking around his place.
Called out. I was just saying that I think we're about 30 minutes over, so we should probably.
No, that's great. Yeah, I mean, and the questions are slowing down too. So I mean, I think we probably answered. There probably a couple more people kind of rapidly sending it, but you know, it was. Listen, Cory and I have been batting this around. I know Cory's probably because of his business has been spending 15 hours a day on this, but I've certainly spent probably on average 2 or 3 hours a day on this for about 6 weeks now. And he and I have been working closely with this. And Jack, thank you for getting us all organized. And we're happy to. I know we're very happy to do this, and hopefully it was of some use to some people. So that's really all we wanted to accomplish.
Yeah, well,
just quick before Jack goes, you guys should both plug your firms, because I don't think you've mentioned the names of your firms once in the meeting. So for your marketing departments, I ask you.
Hey, Cory, you go first. I'll go.
So I'm a partner at Lumsden and McCormick, full service accounting firm in downtown Buffalo. If you have questions, reach out to me, email, LinkedIn, whatever. And I'm not trying to steal clients or anything like this. I believe that the more funds for this program that we bring to Buffalo and Western New York, and keep people employed instead of going on unemployment, the easier it will be for us to come out of this adventure or whatever you want to call it. So I hope everyone's doing well, happy and healthy, and hopefully we didn't bore you, and feel free to reach out with questions.
And Chris Henrich, Woods Oviatt. I'm a partner. Woods Oviatt's a large firm, about 120 lawyers, full service law firm. I do mergers and acquisition and private equity work.
All right, Jack, take us out of here.
All right, guys. Thank you very much. Happy Earth Day. We'll be sending stuff around. Clark, do you want to put up the last slide of the presentation real quick? Oh, you're playing video games or something. It's not up. I get it. Long live Buffalo. The old stream Buffalo. It's going to be here longer than all of us, too. So act with respect and kindness, everybody. All right.
Nice.
Have a great evening or whatever time it is. See ya.
Thank you, Jack. Thank you, Clark. Thank you very much.
Bye, guys.
Bye.